The DoubleLine strategic commodity strategy is one we developed in-house here at DoubleLine. What we were trying to do is find a better way for investors to approach the commodities market. It's a blend of a long-only and a long-short type of strategy that's meant to help dampen volatility. But when investors should be fully allocated to the commodity market, the discretion here at DoubleLine allows us to achieve that.
Most people think about investing in commodities. Their experience is really limited to just investing in one-off commodities like gold or crude oil. The problem with that is commodities have the ability to exhibit high volatility, meaning that they can exhibit large swings in prices, thus leaving an investor exposed to either a significant loss or significant profit in their investment. The trick there is that they need to get the direction of their trade correct. Construct a portfolio of commodities that actually has a lower volatility than that of the sum of the individual commodities themselves. Another benefit of investing in commodities is that they act as a hedge against inflation. And finally, you also have the potential to generate incremental returns by investing in these real assets. With DoubleLine strategic commodity, we actually take it one step further. Rather than just having a long-only broad-based commodity, we introduce a long-short component to this that we can add to the strategy during times where we think that the commodity complex will be more volatile and thereby mitigate some of the potential drawdowns that one could expect to see in a long-only based commodity portfolio.
We view the DoubleLine strategic commodity strategy as a core position in one's portfolio, together with equities and fixed income.
Some investors try to enhance the return of a commodity portfolio by taking on risk in their collateral portfolio. Because most commodity strategies are implemented using futures contracts or swap contracts, you don't have to put up the full notional of the contract value. And because of that, you're left with money that can be allocated as you see fit. And some investors, unfortunately, have fallen prey to investing in risky securities in a search for yield to enhance return. And when those have declined, it has hit their portfolio and caused declines in price that aren't due to the commodity strategy, but are due to debt obligations that they purchased in their collateral portfolio. That was a big problem in 2007, 2008. And it's something we're trying to avoid in this strategy by just using US Treasury bills as our collateral. And that will avoid all credit risk. So the investor doesn't have to worry about a dual threat in the portfolio.
It's a difficult asset class to be able to time from investors, so that's why we've called the strategy the DoubleLine strategic commodity. We think it should be a strategic allocation in investors' portfolios, but there's times where you want to have 100% long-only exposure, and sometimes you need to diversify out to a risk-mitigating market-neutral strategy as well. So commodities are a viable asset class. We think that there's better ways to approach the marketplace than some of the off-the-shelf offerings out there. So we're blending our expertise that we have from the commodities market with our fixed income mindset, analyzing term structure of commodity prices, and trying to deliver what we think is a superior product to the marketplace today.